You're driving to work, nothing special. Then boom, your car slams into a post. It won't start. And right now, this car is the only thing standing between you and losing everything. The mechanic, $3,000. Insurance won't cover it. Your bank account, $300. You just lost everything. Then, 4 words that sound like a rescue. We accept. Buy now, pay later. And that's the exact moment 380 million people got trapped by a company that makes 0% interest and somehow still gets richer off of you than any credit card ever could. 380 million people are using this, 24.2 billion moving through it, and somehow almost none of them realizing they're spending more than they ever planned to. Buy now, pay later sounds like a good deal. 0% fees, split up your payments, almost too good to be true. But BNPL isn't new, it's a modernized layaway program. Back then, if you wanted a washing machine, you didn't walk out with it. The store locked it away, you paid it off piece by piece. Only once it was fully paid, you took it home. Strange to us now, but it protected the seller. Nobody could walk out with a washing machine and vanish. It let people make big financial decisions without taking the huge financial risk. But that model's outdated. You don't want to wait weeks in a locked room, you want it today. That's the Gap Klarna stepped into. Small amounts upfront, say $25, rest split over a month. The product is already in your hand, but here's the question that should hug you. If there's 0% interest for you, how are they making money? So if they're not making money off this 0% part, shouldn't someone have checked this by now? Which while researching really surprised me, because it shows what money and power really can do. There was a rule in 2024, the CFPB, the US agency that's supposed to watch this said, BNPL companies should be treated like credit card companies. Same protections, same disclosures. Then, May 2025, new leadership came in and pulled it. Not, we studied it and it's fine, they just walked it back. So right now, BNPL operation in its own lane, not a fully credit card, not fully a loan, just whatever the companies decide to call it. And that gap isn't just a US thing. Other countries are scrambling to catch up too. No real rules, barely any oversight companies moving faster than governments can legislate. Convenient, right? But that's not what should worry you. If BNPL barely makes money on 0% interest and barely anyone's regulating it, why is stores lining up to offer it? Why is your favorite brand putting that button right next to the checkout, begging you to click it? That's not generosity, that's a business decision, a good one for them, but that still doesn't explain where BNPL companies make their money from. So follow the money one more step. Who's actually buying your debt? Okay, first we need to make it clear, a store pays per sold item 2 to 6% to Klarna when they use buy now, pay later, which is really a lot. Here's what most people never think about. When you buy now, pay later, you don't just buy the thing, you buy more of it. The average order value jumps 20% to 40% and BNPLs offered at the checkout. People add the extra pair, the upgrade, the size, the accessory they normally skipped with their own money. Because splitting 200 into 4 payments of 50 doesn't feel like $200, it feels like 50 in total. So the store isn't losing money on this 2 to 6%, they're making it back. Because you're buying more than you would have. Everybody at the table wins, except you. Remember that question, who's actually buying your debt? Because BNPL companies aren't sitting on billions handing out interest-free credit out of the goodness of their hearts. So where does it come from? Turns out it's not their money at all. BNPL companies handle up thousands of these loans, your $50, my $50, everyone's, and sell them off to Wall Street. Same Playbook banks used with mortgages before 2008. This time it's not houses, it's your sneakers, your phone case, your car repair. Investors bet people will keep paying, and most do, quietly 4 payments at a time. The store gets their sales, Klarna gets their fee, Wall Street gets its slice. Everyone gets paid, except the one thing holding the whole system together is you, quietly making sure you don't miss one payment. That's the part nobody puts in the ad. If this opened your eyes, even a little, subscribe, because this channel exists to show you the system nobody explains to you until you're already inside one. And I would really appreciate it. I mean, this took a lot of effort. So next time you're standing at the checkout and that little button pops up, your payment of 50. Ask yourself the question they're hoping you want. Who actually owns this step once I click yes?